All right, so we are live. Hello everyone, and welcome back to yet another very exciting session today. This is your friend CA Shan Gupta. Welcome to Oliveboard. Now let us begin this session number 2 for banking and finance for the month of January, current affairs. Let us begin our session. Thank you so much. Let us begin. So starting with the first very exciting news that is coming up, that a working group just 1 second, the ink color is yellow. Yes, the working group suggests tighter norms for states while giving guarantees. So what is simply guarantee? What we are talking about guarantee is, for example, let us imagine there are two friends, 1, 2. So Mr. A requires money. Okay, so I'm explaining you the term, the guarantee. What is guarantee? Mr. A requires money and Mr. B has the money, but Mr. B does not trust that Mr. B will repay the money or not. So Mr. B has the money, he has the money over here, and Mr. A requires the money. Mr. B is ready to provide the finance. For example, when there are two friends talking, होता है ना कि दो दोस्त बात कर रहे हैं कि भाई तू इसको पैसा दे दे, मैं गारंटी दे रहा हूँ. If he defaults, I will provide the guarantee. For example, Mr. B is providing the loan or providing the money to Mr. A, and Mr. B requires a guarantor or a person, Mr. C, to guarantee that if Mr. A defaults, then Mr. C will pay that guaranteed amount. So guarantee is nothing but that a third party is guaranteeing that in the case of a default, that third party, in this case the state government, will fill in the liability. So what is guarantee? It is simply that the third person guarantees that if there is a default in the repayment cycle or anything like that, then the third person, in this case state government, will fill in the liability. Okay, so what is happening over here is that the working committee, the committee who is in charge of this, has given a guideline on this. They are saying that there should be stricter norms, says that there should be tighter norms for state governments while providing guarantees. State government should provide guarantees in a responsible manner. So what we are talking about here is the working group constituted during the 32nd conference of the state finance secretaries held in July 2022 to prescribe a uniform guarantee ceiling. So guarantee ceiling, that is the topmost guarantee that a state can provide, is being held over here. For state, amongst others, recommended that the word guarantee should include all instruments. So first of all, what they have done is they have defined the term what is guarantee. Different state governments might hold guarantee as being different for everyone, but here they have first of all defined that guarantee includes all instruments which create an obligation, contingent or otherwise, on part of the state government. So ultimately, in accounting or commerce terms, a guarantee given by one person, in this rough example, Mr. C. For example, again let me repeat, Mr. B has provided loan to Mr. A on the guarantee being provided by Mr. C. So if Mr. A defaults, then Mr. C will fill the amount of loan that is provided. So what is ultimately guarantee? It is a obligation, or you can say in commerce terms, it is a contingent liability. That is, in two sense, it is not a liability as of now. Mr. C is not liable to pay the money as of now, but it is equivalent to a liability that might occur in the future. So guarantee means all obligations, whether contingent or otherwise, on part of the state government. It will include all forms of guarantee that they have provided. So all instruments are included over here. As per the recommendation, the state governments must clearly define the purpose. The purpose should be defined for which government guarantees are issued. So state the purpose should be defined, and the ceiling that we were talking about. What is the ceiling? That fixing the upper limit up to which guarantee can be provided. So the ceiling that is being set can be ultimately for incremental guarantees issued during a year at 5% of revenue receipts or 0.5% of gross state domestic product, whichever is less. For example, if the state government has 100 crore rupees worth of revenue receipts. So what is revenue receipts? It is the day-to-day receipts that the government collects. For example, it can be in the form of taxes that the state government has right to levy on, or any other such revenue source, that is the receipts, that the inflow of the government is 100 crores and the GDP of the state government is, for example, let us say 500 crores. So what they're telling is that the guarantee can be 5% of this, that is it can be 5 crore or 0.5% of 500 crores. What is the amount? Let me calculate. 500 crores into 0.5%, this is 2.5. So the lower of the two should be selected, which is 2.5 crore in our rough example. So what that's suggesting is, what this committee is suggesting is, it should be lower of the two, that is 5% of the revenue receipts of the state government, or it should be 0.5% of the gross state domestic product, whichever is less. The state government may consider charging a minimum guarantee fees. Obviously, for example, in this example, Mr. C is providing a guarantee on behalf of Mr. A. So Mr. C should charge a certain amount of fees from Mr. A. As it is in the article over here, instead of Mr. C, it is state government. So what they're suggesting what the committee is suggesting is that the state government may consider charging a minimum guarantee fees for guarantees extended, and additional risk premium may be charged based on the risk category and tenor of underlying loan, the Reserve Bank of India said while making the recommendations public. So a premium should be charged, just like an insurance premium, you can say, should be charged. Depending upon the risk, the amount can vary. Next, as per the recommendations, the state government should publish and disclose data relating to guarantees as per the Indian government accounting standards. So what is this? What is this term Indian government accounting standards? So let me, for all those students who are non-commerce background, let me elaborate what is accounting standard, what is disclosure that we are talking about, what is all this. So in commerce sense, in accounting sense, when any company or any business provides a guarantee on behalf of a third transaction. For example, I am Mr. Ishan, C. Ishan Gupta, I am providing a guarantee to a third person. Then in my books of accounts, in my balance sheet, in my books of accounts, I have to disclose, I have to give a note that I have provided guarantee of such and such amount. Also, you need to keep in mind that the books are prepared according to certain minimum standards, which are known as accounting standards. So in simple terms, these terms might sound a bit typical listening to them for the first time, but ये है कुछ नहीं, नाम कोई breakup करिए, accounting standard. It is a benchmark which is used for maintaining accounts. From a company point of view, what we are doing is, again let me repeat the 2 points, that we have to disclose such guarantees that the company or the business has provided, and point number 2, they have to follow certain accounting minimum benchmarks, that is accounting standards. Similarly, it is recommended over here also for the state government to disclose and publish data relating to guarantee. All the guarantees that the state government is providing should be disclosed properly. Proper disclosure should be given, and certain Indian government accounting standards should be followed. The RBI all said that implementation of the recommendations made by the working group should facilitate better fiscal management by the state governments. So ultimately, fiscal management being the revenue management, the expenses management would improve. The working group comprised members drawn from Ministry of Finance, Government of India, Comptroller and Auditor General. These are ultimately again auditors, and some state governments also. So various groups collectively have recommended these norms. The terms of reference of working group include inter alia prescribing a uniform guarantee ceiling for the states. So uniformity should be maintained for all the states. If for example a state like Uttar Pradesh is having a higher GDP, then the guarantee limit will automatically increase. If a state like, you can say for a smaller state, the guarantee provided should reduce if the GDP or the revenue receipts are less. So accordingly, varying to the size, this limit of guarantee can be changed. Uniform reporting framework for guarantees given by the state government assessing the adequacy of state's contribution to guarantee redemption fund. Next, the next news coming up is from HDFC Bank, India's largest, what is this? India's largest private bank. It is India's what? It is India's largest private bank, HDFC Bank. So let us read. HDFC Bank seeks Singapore bank license to grow overseas. So what HDFC Bank is requiring, they want to establish their business overseas, that is according to this in Singapore. They want to establish in Singapore. So obviously let us elaborate this. This is Singapore, okay? HDFC Bank. So it is located in India, and they want to, you know, open their banks, or they want to globally spread their banks all around the world. In Singapore right now we are talking about. In other countries also they have their bank accounts. I guess so. In London there is there, and one or two more countries. But right now they want to establish their, they want to grow their business in Singapore. So ultimately, any foreign firm that is coming in Singapore or any other country, for example, Singapore banks are coming in India, they would require to take license by the Indian authorities. Similarly, HDFC Bank requires license from these authorities. Vice versa, they are coming in India, they require license. We are going in Singapore, we require license. So HDFC Bank, India's biggest private bank, is seeking to open its first branch in Singapore, signaling its overseas ambition over sewing up a landmark merger with mortgage financer Housing Development Finance Corporation last year. The bank has applied to Monetary Authority of Singapore. Ultimately, again, similar pattern, they have to apply for monetary for license in India. The Monetary Authority in India is what? RBI, Reserve Bank of India. The Monetary Authority in India is Reserve Bank of India. If Singapore banks want to do business in India, they have to apply to RBI. Similarly, if HDFC wants to do business there, they have to apply to Monetary Authority of Singapore for a banking license and is awaiting approval, according to source familiar with the matter. Again, it is not clear what kind of banking license HDFC Bank is seeking in Singapore, said one of the people, who declined to be identified as nothing major. State Bank of India and ICICI Bank hold qualifying full bank licenses. So these two banks, remember, State Bank of India and ICICI Bank have full banking licenses over there, along with 8 other banks like Bank of China, PNB, etc. BNP, my mistake, etc. So such licenses are open only to foreign banks and allow them to have additional branches and premise ATMs, as well as to share ATMs among themselves, according to Association of Banks in Singapore website. Besides Singapore, HDFC Bank also has presence in 3 other markets like London, Hong Kong and Bahrain. It is in Middle East. This is in Middle East, okay? Middle East, Arab countries. This is towards our eastern side, Hong Kong, London being London in Britain. Next, very exciting news. When I was with my team compiling about the results, this is the very exciting news that we would like to very much share with you all. This news is like talking about the Indian stock markets. So what is Indian stock market? Bombay Stock Exchanges, national stock exchanges we're talking about here. And it is ultimately governed by who? It is governed by Securities Exchange Board of India, again a regulatory authority The sole purpose of this regulatory authority is to regulate the stock market. The main powers were given to SEBI in 1992. So SEBI is ultimate controller or the regulator of the stock markets. So Indian stock markets surpasses Hong Kong to become the fourth largest. Very a happy moment that it has become the fourth biggest equity market globally, only behind three countries, that is US, that is China, and that is Japan. Only behind three countries. So out of so many countries all around the world, you can just imagine that India is on the fourth place. Such a proud moment. Even when I'm talking about stock markets, being a person from finance background, I always encourage my students to look into this avenue also, from investing point of view, from knowledge point of view. स्टॉक मार्केट घर में यही बोलते हैं कि भाई ये तो गैम्बल है, जुआ है, मत खेलो, यहाँ पे नहीं इन्वेस्ट करना. But I also used to think the same only. But after doing my research in this field, I understood that Indian stock market in the coming decades or so has a very good potential of growth. Very good. So ultimately, all those youngsters who are looking into this video and have come to this point of the session, you should definitely do your due diligence on Indian stock market and start investing at an early stage. The Indian stock market has piped Hong Kong to become the fourth highest equity market globally. The combined value of shares listed on Indian stock exchange reached 4.33 trillion as of Monday's close versus 4.29 trillion of Hong Kong, according to data compiled by Bloomberg. That makes India the fourth largest equity market globally. They have crossed 4 trillion for the first time on 5th December, with about half of it coming from the past 4 years. The top three stock markets, US is way ahead all around the world when it comes to stock markets. If you see, the globally largest companies are located in US only, like Google, Amazon, Apple, Berkshire Hathaway. All these companies are located in US. So US has the largest market capitalization. So when I'm talking about market capitalization, a new term has come up. Let me explain you. What is market capitalization? The market values, when we are talking about stock market, from the entire market point of view, it is the summation of market value of the companies listed on the stock exchange. So it is the summation of the market value of all the companies that are listed on the on the stock exchange. So when we add them up, it becomes the market capitalization of the stock market. Currently, the US is the world's biggest market, $50.86 trillion. You can just imagine how much money that is. In comparison to India, it is more than 10 times right now. More than 10 times. India is standing at 4 trillion. 4 point something trillion, and they are standing at 50 trillion, more than 10 times. Followed by China, the market cap of 8.44, and Japan, which is 6.36. Indian stocks reached new highs in 2023 due to bullish investors. Right now, the bull run is right now also it is there, and increased domestic participation. So, end of this news. Next, the Central Bank of India, that is the Reserve Bank of India, offers for sale to reduce government's stake. Public sector lender, Central Bank of India. Oh, sorry, my mistake. They're talking about Central Bank of India. The Central Bank of India has approached the government with a proposal for an offer for sale instead of fresh issue of equity shares through routes like qualified institutional placements and right issue. So any company, this is the basics of accounting, any company which issues shares, which issues shares to the public. The main intention for the company is to raise money. To raise what? To raise money. They want to raise money so that they can expand their business. So for raising money, the ultimate objective is to sell or to issue shares to the public. But what happens is, when we issue more shares to the public, it ultimately reduces the control. Imagine there are many shareholders over here. It will ultimately reduce the control of these shareholders. It will reduce the control of these shareholders in the company. So public sector lenders, Central Bank of India has approached the government with a proposal for offer for sale instead of fresh issue, that is the IPO. They want to not introduce the IPO, they want to offer for sale to the institutional investors or institutional placements or right issues. They do not want to directly go into IPOs. It has chosen to take OFS route to avoid dilution of its equity share base while increasing the public float of shares. The government has a little over 93% in the Mumbai based bank at the end of December 2023. So ultimately, government, it is a PSU, as mentioned earlier also, it is a PSU, government having 93% stake, and they want to do this. In October 2017, the government outlined a recapitalization package of rupees 2.11 trillion for public sector banks. So what is recapitalization? Ultimately recapitalization meaning that for example, in this case there is government, these are banks. Okay, so what is recapitalization? The government is giving more finance or capital to the banks. What will happen is, over period, when government is continuously infusing more and more money into the banks, it will increase the volume of capital and it will strengthen the amount, it will strengthen the monetary system, the banking system of the country. जैसे हम जिम नहीं जाते, जब एक ही मसल को बार बार वर्कआउट करते जाओगे, that muscle will become stronger. Similarly, recapitalization is ultimately infusing more capital into the banking system. So the government outlined a recapitalization package of 2.11 trillion for public sector banks. So this scheme or this recapitalization was only for public sector banks, that is the PSUs, not the private sector or otherwise banks. Central Bank of India received this money, 5,158 crores in 18 financial year, then 6,592 in 19, 3,353 crores in 20 and 4,800 crores in financial year 21. Thus, over the past few fiscal years, the government has infused 19,903 crores into the central bank, that is close to 20,000 crores, helping improve its capital ratio. So what is capital ratio? Ultimately, in rough sense, it is capital divided by the amount of risky assets. Again, what is capital ratio? It is the capital divided by the amount of risky assets. So capital ratio has started to improve due to this. According to rating agency CRISIL, again CRISIL is a rating agency which provides ratings to various securities, various banks, various corporates, various debentures, debt instruments, etc., etc. So it is a rating agency. It provides ratings. Next, the next news is coming up. Government allows direct listing of securities of Indian companies. What? Government is allowing the listing of securities by Indian companies on GIFT IFC. So what is GIFT IFC? Let me explain you. So there is a term called SEZ, that is Special Economic Zone. For example, the city I am living in, Noida, based in UP, that is Delhi NCR, you can say, in the initial phases when Noida started to get more and more established, in the initial phases Noida was a more industrial based city. Government wanted to industrialize Noida, that is to introduce many industries over here so that industries can grow. Similarly, a special economic zone, you can say there is an area which is given a special status where things are being produced or manufacturing can be done or services can be provided, anything That is, this area is given a special status to improve or to, improve the volume of exports. So this special economic zones, any special economic zone when given a status of SEZ is provided with a lot of benefit that can be in taxes or otherwise also. So SEZ in simple terms एक area है, वहाँ पे उसको एक special status दे दिया, वहाँ से आप export करो, we will provide you many benefits. So this is ultimately what this is SEZ. Okay. So GIFT IFSC, the full form will be covered. Just one second, I'll show you the full form first. The full form I mentioned over. Where is it? Not mentioned, I guess so. I forgot to mention or something. Not a problem. So ultimately what this is doing is, this is a GIFT IFC is a special economic zone which is located in Gujarat. Okay. So it is just like a stock market, but it has a terminal where international trading can be done. Something of this sort. The Department of Economic Affairs, Ministry of Finance, that is Ministry of Finance, the Department of Economic Affairs amended Foreign Exchange Management Act, this, and notified the direct listing. What is listing? Let me explain. Direct listing of equity shares of companies incorporated in India on international exchange schemes. What is listing? So we have continued. So one concept is SEZ, Gujarat model, and everything. So GIFT IFSC is a SEZ in simple terms, like in most simplest terms, it is the SEZ located in Gujarat. Okay. So one aspect is there where international transactions can be done. Simple terms. Okay. Second is listing. So what is listing? Ultimately companies, Indian company, for example, let me say that there is an Indian company which wants to raise funds. Okay. I just explained a few minutes back. Every company requires funds, whether it being the company you are working in, that future company that you would work in, or the company that I am working for. Every company requires funds. Okay. So Indian companies require fund, and they have two options. Either they can raise this fund from a domestic market, that is the Indian market, or the second, they can raise this fund from international or foreign market. They can raise this fund from foreign market. Okay. So there are two ways through which funds can be raised. So foreign markets they can raise funds from. So if they list, that is, if there is a terminal where you can list your securities and foreigners can invest from there, that is what we are talking about. So direct listing of equity shares of companies incorporated in India. So Indian companies can do direct listing on such international exchange schemes, such terminals that are being provided. Simultaneously, the Ministry of Corporate Affairs, that is the MCA, has issued companies listing of equities in permissible jurisdiction rules 2024. So ultimately, to make this possible, that direct listing of securities can be done by Indian companies, in simpler terms, to reduce the hassle of listing, or in much simpler terms, in another terms, let me explain you through another angle. That is that to raise funds from international markets in a more easy manner, for the Indian companies through issuing securities, that is equity share or something. Through issuing securities, all these changes in laws are being done. This one, the Ministry of Corporate Affairs, Companies Rules, and the that is Foreign Exchange Management Act. All these together provide an overarching regulatory framework to enable public Indian companies to issue and list their shares in permitted international exchanges. As of now, the framework allows unlisted public companies to list their shares on international exchange. Now what is this? One is listed company, one is unlisted company. भैया इसमें डिफरेंस ही क्या है, ये नहीं समझ में आता. जो कॉमर्स का बच्चा है उसको तो बढ़िया मजा आ रहा है कि भैया अनलिस्टेड लिस्टेड, आई नो व्हाट इज अनलिस्टेड व्हाट इज लिस्टेड. कॉमर्स स्टूडेंट्स आर लाइक व्हाट इज लिस्टेड व्हाट इज अनलिस्टेड हमें सब पता है. सही बात है ना कॉमर्स वाले बच्चों? थम्स अप दे देना बढ़िया सा अगर आपको पता है तो. Listed companies, in simpler terms, the stock markets, if you know, then very good. A stock market, that is Bombay Stock Exchange, National Stock Exchange, governed by again SEBI, whenever a company wants to get its share listed, that is they want public to participate in their shareholding, then that is known as listing or listed company on a stock exchange. To get the company listed, there are various rules that SEBI requires to be fulfilled. Okay, so for example, I am a company, I am a private company, I want public to buy my shares, that is I want my company to be listed on the stock markets. I want buying and selling of my shares to be done on the stock market. So I'll go to SEBI, I will apply for this, and I will ultimately I would be required to fulfill the norms of SEBI. That is, they will make me sign a listing agreement. Okay, so there are again rules need to be followed. So listed company, a company which is listed on stock exchange and public can participate. Unlisted company, the opposite of this. For example, there are private companies. Various private companies are there which are not listed. According to my understanding, for example, Patanjali, it is not a listed company, it is an unlisted company. Okay, so as of now, any unlisted Indian company, which is unlisted, which is not listed on the Indian stock exchange, can still list their shares in international exchanges. So might be in the long run they amend the rules or change the rules or law in such a way. SEBI is in a process of issuing the operational guidelines for listed public companies, the international stock exchanges at GIFT under regulatory or special provisions of IFSCA, namely India International Exchange and National Stock Exchange International Exchange, have been currently prescribed as permitted stock exchange under this rule. So according to this understanding, only two exchanges, that is NSE International and India International Exchange, are allowed to list such shares. So only two as of now. Earlier, though the Companies Amendment Act 2020 enabling provisions were included in Companies Act 2013 to allow direct listing of prescribed class or classes of securities of prescribed classes of public companies incorporated in India on permitted stock exchanges in permissible foreign jurisdiction or other prescribed jurisdictions. So ultimately what they are telling is, while the Formation of Companies Act, certain provisions were kept over there that such things can be done. The enabling provisions, meaning the supporting provisions of the Companies Amendment Act 2020 were accordingly brought into force with effect from 30th June 2023. So ultimately they are talking about a bit of legality. You can say in simpler terms that they have made the law in such a manner that such futuristic steps can be taken on later. So in 2020, when the amendment came in the company law, such provisions were activated. Okay. The next news is 4 companies get SEBI's nod for launching IPO. So what is an IPO? Again, initial public offer. IPO, what is IPO? Initial public offer. So initial public offer, when a company for the first time issues shares to the public or invites applications for shares from the public, it is known as an IPO. So 4 companies, as I mentioned earlier, let me elaborate this. A company, there is a company, okay, and this is market. Just one second. This is this. Let me shift the market over here. This is market, and this is public. Janta hai ye. This is public. Okay. So company wants to raise money. Correct. So company will go to the market, that is Bombay Stock Exchange, National Stock Exchange, and will get the share listed over here. Will get the share listed over here so that public can buy or public can sell the share, ultimately leading to a raising of money, so that they can raise the money. Okay, so that they can raise the money. Correct. So while there were many instances due to which SEBI was given so much power in 1992. For example, the Harshad Mehta scam, it happened, it was exposed, it not happened, it exposed in 1992. You know what happens is, such markets, no doubt company raises the money, majority of the company raises money, uses the money for genuine reasons, no doubt about it. But many a times there are many companies which raise money with the intention of defrauding it. And such patterns were seen during 1992 when the Harshad Mehta scam was exposed completely. There are other instances also, Satyam scam was there, etc., etc. Many scams have happened, but ultimately the money or the faith of the public gets distorted in such a manner. So while the companies or the issuers, these are the issuers, the retail investors and the intermediaries, that is the brokers, the stock brokers, the broking apps, everything are being completely under the governance of SEBI, are completely under the governance of what? Under SEBI, correct? So what SEBI does is, SEBI requires all these participants, the issuers, the investors, the intermediaries, brokers, etc., to fulfill certain requirements. For example, if I am an investor, I am a retail investor, I do not do much of investing, but to the certain extent I do, I have to also submit my documents to the broker, that is PAN card or details that is required from time to time. So I have to provide that information because SEBI requires it. So when a company issues such shares to the public through an IPO, that is initial public offer, they have to submit their documents to none other than SEBI. And SEBI, after conducting research development or conducting a complete run through of what the company is doing, checking the background check, the due diligence is done, everything like that, after doing all that, either they can reject, they can raise their points of concerns, or they can approve the IPO, they can give a nod to the IPO. So 4 companies have received the nod to launch IPOs, that is Entora Healthcare Solutions, JNK India, Exicom Telesystems and Acme Fintrade India have received market regulator SEBI's approval to raise funds through the initial public offer. However, Securities Exchange Board of India has returned the IPO paper of Stallion India Fluorochemicals. So this company has been rejected for IPO. As per the processing status of draft offer documents till January 19, the watchdog has approved the initial public offer of 4 companies, correct? These 4 companies, which had filed their preliminary papers with the market watchdog between June and October, obtained observation letters. That is, the SEBI has raised certain points of concern. That these points you need to take into consideration. On January 16 to 19, an update with Securities Exchange Board of India showed on 26 January. In SEBI's parlance, obtaining observation letter means go ahead to launch an IPO. What is this meaning? For example, there are observers. They say if an observation letter of if points of concerns have been raised by SEBI, that means that to a much major extent there is an approval chances by the SEBI. जैसे भाई अगर मुझे कोई कंसर्न आ रहा है, मैं कंसर्न दे रहा हूँ, मैं SEBI हूँ, मैं अगर कोई कंसर्न दे रहा हूँ, इसका मतलब there are chances that your IPO has been approved. There is a go ahead for the launch. So observers have put this point. Next news is Yes Bank becomes the first Indian bank to conduct export finance transactions on RXIL's ITFS platform. Yes Bank became the first Indian bank to execute an export finance transaction on the International Trade Financing Services platform of RXIL Global IFSC Limited, a leading cross-border fintech company registered under the International Financial Service Centers Authority. Again, this was mentioned earlier also, that International Financial Service Center Authority, there is an authority for international transactions, and on this circuit there is this company that is registered. Yes Bank has been the first bank to conduct an export finance transaction, export related transaction on this platform. Key features: this strategic partnership facilitates arranging credit for exporters and importers from both Indian and global institutions through factoring, forfeiting and other trade financing services at competitive prices with quick turnaround using digital platform, the bank said in a press release. This is the first transaction on the ITFS platform in collaboration with any bank of India. RXIL, it is, what is RXIL? That we are talking about, it is a joint venture between Small Industries Development Bank and National Stock Exchange, is promoting the international financial services. So ultimately it is a joint venture between SEBI. Again, what is SEBI? It is a regulatory body that you can say regulatory body or a institution. The main objective is to develop small industries. Okay, so between the National Stock Exchange and the SEBI, it is a joint venture where international finance or international transactions can take place. That is, it is promoting international trade finance services, an initiative that aims to democratize the trade finance space by providing an electronic platform to connect exporters, importers and financiers across the world. So let me explain with some example. For example, a platform has been created. Just imagine a platform like, stock market. As I was explaining, these platforms of stock market, there are buyers, there are sellers who participate between buying and selling of a particular security. That is it. Similarly, a similar platform with a different purpose has been made. Instead of buyers, there are exporters. Instead of sellers, there are importers, and there are financiers. These can interact from all around the world, and they can exchange goods, or they can they can exchange finances. They can implement more transactions. So this platform will help India in conducting more international transactions. RXIL Global aims to improve financing opportunities for Indian firms, particularly the MSMEs, because again SEBI is involved and SEBI deals with small industries. So MSMEs, many times what has happened is that MSMEs, that is micro, small, medium enterprises, again micro, small, medium enterprises are not able to fully execute their export orders. One of the reason can be arrangement of finances. So this platform that is being created helps in helps the MSMEs in getting more financiers or finance from places at a cheaper rate. A subsidiary of Receivable Exchange of India and RBI regulated trade receivable discounting system platform that facilitates invoice discounting for MSMEs, RXIL Global says this facility will ease the cash crunch small businesses often face. What is invoice discounting? So ultimately what is discounting is that there is this business MSME, for example they are exporting. This is a person in another country, he is an importer, okay, and we are the exporter. We have given him, for example, 3-month credit, and we have an invoice saying that this importer Mr. A will give us the money after 3 months. Okay, I am the exporter MSME and you, the audience, is importer, that is Mr. A. Okay, I have sent you the goods and after 3 months you will make the payment to me. But I am in urgent requirement of money, so what will I do? I will go to the banks and get the bill discounted. That is, I will go to the bank and tell the bank that you can have the bill. After 3 months of maturity, this person will give you the money, but due to urgent reason, I require the money. Bank will deduct a certain fees on this and will again transfer me the money. This is the discounting process that is being followed. What happens through this is that MSME, which is always in shortage of money, will receive the money faster. Again, this system will help all the economy also in faster development, executing more orders. So now we have come to the exciting part of our session, that is now we are going to conduct certain MCQs. A change has been done, that is a few MCQs I have introduced over here. So all those people who are still connected can let me know your answer. Karnataka Bank, these are small newses that have been converted into the MCQs. Karnataka Bank, a leading private sector bank, and CLIX, CLIX Capital, one of India's fastest growing new age NBFC, have entered into a strategic digital co-lending partnership through Ubico Lend platform. This partnership is focused on providing dash type of loans. So A, B, C, D, E. What are the options that you think would be the correct one? Let us come. This is MSME. So Karnataka Bank and CLIX have come into an agreement to lend loans. The partnership focuses on MSMEs. Okay. So Karnataka Bank and this again same story. This partnership is focused on providing loans to Indian MSME sector, which is one of the biggest contributor to Indian GDP and employment growth. Because small scale industries is ultimately more labor intensive, they require more jobs, they require more employment. Next question coming up, let us discuss. Which bank has unveiled Smart Fin, an advanced digital supply chain finance platform developed in collaboration with VFin Solutions to support MSMEs? So another question, A, B, C, D, E. Let me know in the comment section which answer do you think is the correct one. This is again Yes Bank. So Yes Bank unveiled this, Yes Bank has done this, and again the move reflects that Yes Bank's commitment to fostering innovation and amplifying its digital offerings, particularly in the realm of working capital efficiencies. So Yes Bank has taken the lead over here to provide very effective and innovative ideas when it comes to finances. Next is Bank of Baroda, wholly owned subsidiary for cards, that is BOB Financial Solutions Limited. There is Bank of Baroda and there is the subsidiary BOB Financial Solution Limited, has been rebranded as Bob Card Limited. So again it has been rebranded as Bob Card Limited with a tagline. What is the tagline of Bob Card Limited? What is the tagline of Bob Card Limited? The tagline is Credit Reimagined. So the tagline is Credit Reimagined. So Bob Card Limited has been rebranded and the new name is Credit Reimagined. Next, the key, other key announcements. The company again Bank of Baroda rebranded as Bob Card Limited. The tagline is Credit Reimagined. The company has exclusive credit cards for defense personnel including Army, Indian Navy, Indian Coastal, Assam Rifles, professionals like ICI, ICMI, ISI, etc. etc. So they have special type of cards, credit card facilities for different category of people. What is a credit card? It is a plastic card that is being provided by the company, through which you can avail a credit limit from the company. You can use that limit to purchase something and later on you can pay the money. It is also merchant payment processing partner of Bank of Baroda's merchant acquiring business. Next, these are certain questions coming out from today's session. Let us discuss these questions in a quick manner. As per suggestions of working group, tighter norms of state while giving guarantee, many considered fixing a ceiling of incremental guarantees issued during a year at dash of revenue receipts or 0.5% of GDP. As discussed today, the state government, while providing guarantee, needs to keep the upper limit up to dash of revenue receipt and this. So what is the correct answer? This is 5%. Next, which countries are the top 3 stock markets? US, China, Japan, US, Japan, Russia, Hong Kong, Russia, US. US is common, ultimately you can see. So the top 3 are US, China, Japan, and India has come on the 4th place, just beating Hong Kong. Which bank has the first, which bank becomes the first bank to hit 2 crore credit cards milestone? And the answer is HDFC, the India's largest private bank. Here is the news. Let us discuss this. HDFC Bank, India's largest private bank, sector bank, said it has become the first lender in the country to achieve a milestone of 20 million. 20 million. So how much this is? This is 2 crores. 2 crore credit cards have been enforced by HDFC Bank. So this is a huge milestone they have crossed. The 10 million milestone was crossed in 2017 and the 20 million has been crossed just now. So HDFC Bank is the largest issuer of credit cards in the country, which commands over a fourth of overall credit card market. According to Reserve Bank of India data of November this, HDFC Bank's credit card in circulation stood at this much as compared to 19 point this in October. So it is steadily increasing. HDFC Bank is followed by SBI card, ICICI Bank, Axis Bank in terms of number of credit card. So HDFC in terms of credit card is at number 1, then it is SBI, then it is ICICI, and then there is Axis. So this is the sequence. So with this we come to the end of today's session. Thank you so much. Hopefully this session was very useful. You liked it a lot. Bye bye and take care until we meet for the next session. All the very best. Bye bye.